Hello, everyone, and happy Financially Lit Tuesday. I hope everyone's having an amazing Lit Tuesday. Thank you for joining me. Those of you that are joining me from the Sipping Wealth YouTube channel, be sure to hit the notification bell and the subscription button so that you don't miss any Financially Lit Tuesdays, and so you can continue to stay tuned in with us. If you're tuning in general, go ahead and drop a comment in the comment section so I know exactly who's tuning in today, so that we can go ahead and get started. So today we are going to be talking about qualified business deductions. I'm sure quite a bit of you already know like some really good deductions, or maybe you're like, I've heard of deduction, things I could deduct as a business owner, but I don't really know. So I'm going to go over them today. For the next two lives, we're going to do business. Well, we've done like business credits, and now we're going to do business deductions. So if you missed last week, I went over some like awesome business deduction credits. So you want to make sure that you go watch last week's live on the Sipping Wealth YouTube channel. Tonight, I'm going to be talking about deductions. Like I said, go ahead and grab your notepad, whatever you need to do so that you can make sure you get these write-offs on your taxes this year, so that you're also aware of it as well. All right, y'all. So we're talking about qualified business deductions. All right, y'all. So we're talking about, hey, things that actually make sense. Yeah, you're like, hey, phone bill, am I able to write that off? So we're going to go ahead and talk about the specifics on how you can go about writing these things off. You can't just jump and start writing things off, right? Just because you have a business now. There is definitely a way that you have to go about doing it. All right. Like I said, so small business tax deductions or write-offs are business-related expenses, y'all. Okay, business-related expenses. So if it has to do with if it's something that you need in order to operate your business, or it's something that you utilize with your business, if you purchased like a business phone or a vehicle for your business, it makes sense. All right. So we're gonna get into all that nitty-gritty. All that good stuff. According to the IRS, business expenses must be both ordinary and necessary. Okay, ordinary meaning like it's needed for the common like trade or business type. So if you're in the business of selling lotion and you're like, hey, I need a printer to print the labels. I don't know. I'm trying here, but then you need that for your ordinary trade or business. If you're in the business of transportation and you have to purchase a vehicle for your transportation business, this is ordinary expenses. Necessary is things that are necessary, like it says, for your business. So appropriate and helpful for your business. You can't just say, hey, I bought a Louis Vuitton bag because like I really needed it. Like, right? So we want to make sure that all these expenses and things like that make sense. An expense generally doesn't have to be indispensable, meaning like extremely necessary, but it has to be like ordinarily necessary for the business at that particular time. Also, bookkeeping comes in handy. So you need to make sure you have detailed records, bookkeeping, receipts. Also, on the back of your receipts, when you go somewhere, I have all my clients, make sure that they upload their receipts and things like that. But when you go somewhere, you can write on the back of the receipt why you were there or what it was for. So if you went out to lunch with a colleague to talk business, then you go ahead and write on the back of the receipt, hey, I met with Susan and we spoke about new business venture to launch new product line. Whatever the case may be, if that makes sense for you. All right. Okay. All right, so I'm going to go ahead and bring up my next slide. So this right here is the itemized deduction. So I'm going to leave this up a little bit. So as I go ahead and talk for the next couple of minutes so that y'all can go ahead and look at this. If you're tuning on from Instagram, you won't be able to see this, but you should hop on to the Sipping Wealth YouTube channel. All right. So startup and organizational costs. So these are things that you need in order to start up the business. If it has to do with acquiring an asset for the business, like a building, then no, that's not startup costs. But if it has to do with accounting expenses, legal expenses, things like that, then yes. All right. Inventory. Now we do have like inventory expenses that for when you're starting up your business or just in general. All right. So when you have those inventory items for your business, whether it's beginning inventory, um, like the amount of like back to the lotion example, if you need the carrier lotion and the essential oils and things like that, that goes into your inventory, right? And then you have to keep track of how much ending inventory that you have at the end of the period or the year. Okay. Now, the cost of goods sold, as you can see on the screen here, it includes all of these things. So, direct labor, not including you as the owner. Okay. If the owner, taxpayer, it doesn't include labor costs for you, but it does include labor costs for, say, an assistant that's helping put the product together. Okay. Materials, shipping. Now, this is freight in. So anything that's being shipped to you for the cost of goods. Maybe it's the shipping cost to go ahead and bring in the lotions in the example that I've been using. All right. So that's gonna have to do with the cost of goods sold. So this is something that my product-based business owners, please make sure that you are keeping track of inventory because this is going to be a huge determining factor of how you're doing as far as your products, your different product line, how they're doing, and also how much taxes you're going to pay on the uh, on the amount of money that you received throughout during the year. Because if you only actually sold half of your inventory and you expense all of it, then legally you're going about the wrong way. Or maybe you're like, oh, I didn't keep track of inventory. I think it's this amount. You could be shortchanging yourself as far as how much deductions you can actually take. All right. Okay, so utilities. Utilities cost is something that's pretty big too. Now, when it comes to utilities, this can also it could be the like space that you're utilizing. Maybe it's the lights, the water bill, things like that for the unit that you're utilizing. Maybe it's also the like phone expenses, things like that you need for the actual facility. Insurance. So this doesn't this is not the insurance for the actual business owner, right? This is for like everyone else that the business is providing for, or actual employees. So actual employees, maybe it's even liability insurance. So I know for my company, we need E&O insurance, so errors and omission. So we need to make sure we have that liability insurance in place in case of whatever. So whatever business you are in, you need to make sure that you have certain insurances and things like that, and that is deductible, 100% deductible, with when it comes to the IRS. All right. Now, when it comes to business property rent, that's deductible. All right. Now, if you have any questions regarding these business deductions and whether or not it makes sense for your business, then you can go ahead and drop a comment. Don't be afraid to drop a comment. This is a live. This is completely live, so you can ask your questions. Now, like I said, when it comes to business property rent, you can deduct that. Now, whether or not your business property count as actual business property is whether or not you're utilizing it for business. So if you have a space in your home that you're utilizing specifically for business, then you want to make sure you take the measurement of that space. And then now you want to calculate the direct and indirect costs associated with the space. I know it's a lot, but it can be done. All right. So when it comes to auto expenses, this is huge because a lot of business owners are like, hey, I want to write off my car. Yeah, I use it for business, or I just bought a vehicle under my business's name. If it's a business vehicle, then you can depreciate that asset. Okay. You can depreciate the vehicle if it's a business vehicle. Now, if it's a personal vehicle that you're utilizing for business as well, then you can take the standard mileage deduction, or for the amount that you're actually utilizing for business. Okay. Now for auto expenses, you have to have these things record and on actually written out. So there are tons of apps out there, even free apps that you can literally track your mileage. I recommend all business owners have an app or something that's going to track your business mileage so you can have it at the end of the year. So the current rate is 58 cents per mile that the IRS gives you to write off. So if you drove 10,000 miles, right, for the year, the IRS says, hey, 58 cents per mile, you can go ahead and deduct as a standard mileage, right? So that's huge. You definitely take advantage of that. All right. So rent and depreciation. Now I said if it's owned by the actual business, this is now you can go ahead and deduct these equipment, whether it's like I see Bracey's on with us. Hey Bracey. So if it's equipment like your camera equipment, things like that, then you can actually deduct this stuff over time. Or maybe it's like your lighting, like huge things that you purchase. You can deduct it over time. There is certain there are certain assets and things like that that qualify for an immediate deduction, 100% deduction, and then there's some that have to be actually amortized, like depreciated over time. So you have to depreciate it over the course of 5 years, 7 years, 27 years, depending on what it is. All right. So software subscriptions. So for those of you that use apps, I know in my business we have apps that we utilize. What are some things that you have, or some some things that you have in your business, some expenses that you have in your business that you have questions on? You can drop them in the comment section. So I know for me, software subscriptions are one of them. Those are deductible as well. Now, once again, has to be utilized for business and has to be a necessary or ordinary expense, right? Entertainment. Business, I know travel and entertainment is huge because business owners are always like, hey, can we deduct this? We want to go on a trip, da da da. And you see all these lavish trips people are taking on social media, right? Going to Hawaii and Bali and the most. And they're like, yeah, it's deductible, right? And they're laying on a beach somewhere. Legally, it has to be a necessary business expense. So if they're going to a business conference in, say, Hawaii, or maybe it's a actual business trip or some kind of thing having to do with business in that foreign country, or maybe even this country, whatever the case may be, then yes, but only the parts that are actually associated with business. So if while this person is on the trip, maybe it's a 5-day trip, and only 3 days they're actually doing business stuff, and the other 2 days they're like, yeah, we're gonna hang out and sit out on the beach and just relax. Those 2 days are not deductible, but the 3 that were used for business are. Okay, it's a very like a fine line there, but the line does exist. Okay, just so that we're aware that it has to be for business. And then so there are certain expenses when it comes to like meals and entertainment that are 50%, 80%, 100% deductible. So if it's having to do with uh regular meals, maybe with coworkers, not coworkers, potential partners, or maybe it's a business trip, things like that, then that's 50% deductible. Of course, we're in this year where we can do the 3 martini rule where it's 100% deductible, but generally speaking, that's how it is. Now, if you do an office party, say, all the employees come together and you're just like celebrating your employees, then that's 100% deductible, right? So if we're like, hey, I'm like, hey, Jocelyn and Sierra, we're having a, a strategic tax accountant day where we're, enjoying each other and celebrating this awesome tax season, then that's 100% deductible. Now, if I say, hey, Mr. Client, let's meet for lunch, or hey, potential client, whatever the case may be, let's meet for lunch, then that's 50% deductible. All right. Example, fine line there. Okay. Interest payments. So with interest, if you have a small business loan that you're paying interest on, any like interest that like associated with business, now or any loans that are that you're paying on that you have to pay interest for, that's not a family member or yourself, then you can actually deduct those interest payments. All right. Now, bad debt. Now, when it comes to bad debt expense, so for those of you that maybe that you have clients that that you're supposed to receive money from and you already counted it as income on your books, and you haven't actually received it until like the next year, and you wrote it off on your taxes as not being received, then you actually have to claim it when you actually receive it in the new year. But bad debt, you could actually take advantage of writing off those things. Maybe credits to customers. Maybe you have to credit a customer. Maybe you have loans to clients and suppliers that was never paid. You can deduct on your taxes as well. So, you could definitely do that. Now, taxes, you can also deduct your taxes on your tax return, on your business, your business taxes. All right. So you can deduct those taxes as well. Those are deductible, whether it's your federal, state, maybe sales taxes that you're paying, not sales tax that you're collecting from the customer, sales tax that you're paying yourself. Um, that you can also take that deduction as well. All right. Employee wages and salaries are deductible. Bonuses, commissions, things like that are deductible. Employee benefit programs. Maybe you have a retirement plans or different qualified plans for your employees. Those are deductible as well. Now, when it comes to gifts, I want to talk about gifts because a lot of clients, and I have like real estate clients as well, and they're they do the closing gifts and things like that to their clients. Now, when it comes to gifts, that the IRS gives you a $25 per item per person per item. All right, so if you are purchasing a a calculator for my client. I'm like, oh yeah, I want to give them a golden calculator because they're awesome. All right. So, and I want to embroider their calculator. So, if the calculator is $25, I mean, if the calculator is $50, I can only take the $25 deduction. But the embroidery for the calculator, I can take that additional. The shipping for that calculator, I can take that deduction as well. But the actual calculator, I can only spend $25 on or deduct $25 of that amount. Again, fun areas. That's okay. That's why you reach out to strategic tax accountants, and we got you, right? All right, just one more, and then I'm gonna go ahead and get out of your hair. All right, y'all. Choo choo choo. Let me bring this up. I was supposed to have this up, y'all. Um, so for my contracted labor, this is huge, okay? Because I have a lot of business owners that are paying like people that like contractors and things like that during the year to do different work for them, whether it's marketing um or maybe they have like a virtual assistant that they're paying, whatever the case may be. If you have contracted labor that and you're paying them more than $600 for the entire year, you have to give them a 1099. Okay, so it can be a 1099 MISC or it can be an NEV 1099. All right, but you have to give them a 1099. And if you're actually paying like a corporation, an incorporated business, then you don't have to issue them 1099. But if it's a person or a sole proprietor, then yes, you have to give them that 1099. All right. Now for my PayPal people, maybe Uber, not Uber, but Clover, merchant processing services, they normally give you a 1099K and that's gonna show all your merchant sales, things like that. All right, because they're processing your payment. Now, oh, I did say I was just going to do one more. This is the last one for real. Legal and professional fees. Okay. For those of you that hire a strategic tax accountant or that are like, oh my gosh, I need accounting services. I need someone to go over my books, whatever the case may be. Those services, those things are deductible. Okay. So accounting, legal services, they are deductible, 100% deductible on your taxes. So, whatever you're paying me, whatever you're paying the accountants or us accountants or anyone else that are providing those services to you, it is 100% deductible, so you can take advantage of that. All right, y'all. Did I win that on? Cool. So that's it for the qualified business deductions, y'all. Next week is huge because we're gonna have Trey Hagens with ADP, and he's gonna go over payroll compliance for S corporations. So y'all that are thinking like, oh my God, I need to put myself on payroll, or maybe you've done payroll in the past and you're like, I don't know if I'm doing it right, or maybe you have business owner friends that need to make sure they're on this live next week. So, like I said, we're going to have Trey here. We're going live with him so that he can give us the insight on payroll compliance. This is huge, y'all. This live was big. Next week is going to be huge. We're doing amazing lives all tax season. Make sure you tuned in. Make sure that you go to the Sipping Wealth YouTube channel, hit the subscribe button and the notification bell so that you don't miss any financially lit Tuesdays, but so that you can also actually stay tuned and stay up to date on all these financial news and facts and tips and things like that. Because why wealth up by on your own when we can wealth up together, y'all? Y'all have an awesome, amazing Financial Lit Tuesday. If you have any questions, anything like that, feel free to reach out to us at Strategic Tax Accountants. You can head over to our website, strategictaxaccountant.com, book your tax appointment, book your consultation, DM us with your questions. If there's a particular topic that you're like, oh my gosh, I need help, I wish you would cover this, then go ahead and send us a message or comment on this post so that we can make sure that we cover it in our future lives. Again, y'all, thank you for tuning in for this week's episode of Financially Lit Tuesday. And I'll see y'all next week at 6:30 p.m. every Tuesday, bringing you news, tips, and tricks, y'all.